Hey, welcome back, everybody. So the question is, are the sellers on strike? And the answer is, yes. Why? We're going to go into that. Plus, everybody's telling you that the market is crashing. Well, it's funny because they've been saying that since 2020. And if you go back even as far back as YouTube allows you to on our channel, you'll see we're pretty accurate. And what I'm telling you is, yes, our inventory is low. Yes, we have a massive pent-up buyer demand. Yes, interest rates are absolutely crazy high, but it is still a seller's market. And you're like, what? How can that be? All right, so we're going to deal with local market only. We're going to talk about what's going on here. Yes, we're going to bring in one metric of the national side. But listen, even nationally, and even some of the naysayers are starting to change. As an example, even Zillow is now saying with the revised information that this year, the end of 2023, yes, the year of the 7% mortgages, home values are going to be up 5%. Well, isn't that interesting? Because supposedly we're supposed to be crashing, and we're not. So understand, well-priced homes are still going off market within the first 7 days. And that is a super important number because that is also when you will receive between 100 and 107% of list price. All right. You miss that mark, you go out to 20 days, you're only going to look at 98, maybe 96% of list price. So you already lost 4% as a seller. As a buyer, you just made money. Well, kind of. All right. If you go out to 40 days, hey, listen, you're going to look at 92, 93% of list price on average. Okay. Again, that also as a seller puts you in a negative negotiation position. If, however, you want to have the most amount of money in the least amount of time with the fewest hassles, you need to price your home to sell within the first 7 days. I'm just telling you, that is what you need to do. You need to remove that sentimental equity. You have to take a look at it in a very objective way. Now, with that being said, understand there's no selling here. This is just solid information for you guys to make the best business decision when the time is right, both as a buyer and as a seller. All right. And we're going to go through some metrics to help you guys understand and get past some of the, I would consider, internet noise where, some people are saying, hey, you know what? If you have a real estate agent who's telling you now is a good time to buy, you should get a different real estate agent. And I kind of laugh and I challenge that person. Of course, they're not responding to me because my comment was, hey, listen, every market has its opportunity. And if we think that rates are going to go down and now is still a good time as far as getting good values, why is that a bad idea? Oh, because it's not. And if we know that prices are going up, let's take, for example, some of the naysayers, some of the buyers that we chose not to work with who indicated that, hey, listen, you know what, back in 2020, market's going to crash, it's going to come down, it's going to be horrible. And then they reiterated that in 2021 saying, oh, it's insane that prices are going to crash, they're going to come down. Hey, listen, if you don't have enough inventory, that is not going to happen, okay? Because there is a massive pent-up buyer demand. We are still home short. We're going to get into that. Why is this valuable? Why is this important? Well, you need to like, subscribe, and share this information. In fact, smash that subscribe button. Why? Tell us what you like. Ask your questions. Super important because, look, I'm not going to hunt you down to try and get you to do business with us. We're either going to earn that or we're not. The key is to get you solid information, make the best business decision. Getting back to those buyers that back in 2021 that are now looking at homes that are 30 to 33% higher than when they were originally looking. Interest rates back then were in the 3s, and now they're in the high 6s, 7s. For those of you that did purchase and are looking at maybe alternatives, look, what a brilliant decision you made over what they did not do, okay? We still have some of those folks that say, oh, yeah, man, George, I should have listened to you. Dang it. And I'm like, what do you want me to tell you? I told you every single week what to do. And even now, even today, it is still a good time to secure your home. It is the only way to actually lock in as much of your biggest expense that you will have. Sure, renting has its merits in certain areas. There's a rental calendar calculator that will give you guys access to. We'll put it in the link so you can decide, hey, based on average rent, and be honest with it versus price, where is it at? And on average, purchasing right now still makes more sense because rents are still on their way up. They're a little bit flatter now, but they did take a big jump, and they will probably in 2024. All right, let's move on. Are we in a reverse crash? And the answer is mostly yes. Why? Well, again, because even in 2020, these people were saying, look, things are going backwards. We're heading down. It's like moving the deck chairs around on the Titanic, which is, well, not true. But take a look at this. So we had 1,218 homes coming on market, but we are still taking 1,300 and, 12 off the market. Why? Because the pent-up buyer demand is still there. And we just talked about it, right? Interest rates are at some of their highest levels here. Well, except for years and years ago, but they're pretty much higher than we have seen in the last, say, 10 years, okay? At least on the higher end of that. Yes, we do expect those to come down a little bit, and those will adjust, okay? When you take a look at the solds, even the solds are super high, but look at that. We have over 500 false starts. Remember, people, as a seller, you cannot overprice your home. Buyers are super, super smart. They have access to so many metrics, and they know because, hey, listen, if there's only 5 cans of soup out there, okay, everybody's going to look at that, and it will reach its highest and best value. Okay, and that's really what it is. Our inventory is about 10 to 12,000 homes less than where we should be at. We are at about 42% where we were pre-pandemic wise. If we go back, to a few years back, we're still lower. Even in 2019, we're still lower in inventory. Okay, all right, just saying. So when we take our next move here, let's take a look at this. So super interesting. When we take a look at this chart, you might say, George, what the heck? I'd say, hey, listen to this. This is our months of inventory chart. We go back all the way to 2008. And as you can see, 2008, which is our crazy, that was our great recession, and inventory went up. We had, well into the 14s, almost 15 months of inventory. Then when you come across, and you can see in 2020 and in 2021, our inventory absolutely fell off. Two polar opposite markets. But look at that. If you look at that chart, you can clearly see that at the 5-month mark, that is a balance, right? Between 4 and 6 months is a balanced market. So let's call it 5. 5 in the middle between 4 and 6, mathematically speaking. All right. So if we're above that line, then we have a buyer's market. Meaning if we have more than 5 months of inventory, getting to the 6 and above, that's actually a buyer's market, okay? But look at this. Again, we're still, even with 7% mortgages, we are below that. In fact, we're at like 1.5, 1.7 months of inventory. That is still a seller's market. And that is very clear. When we take a look at the next chart here, when we talk about our actual numbers, you can see that year over year, we're about 12,000 sales off of last year. And part of that, if you take a look at the top line there, inventory is staggeringly way off, okay? We are still suffering. We are still looking for sellers to come online. And you might say, George, what the heck? Why aren't there more sellers? You got to be kidding me, right? More than 60% of the homeowners refinanced when the interest rates were in the mid to low 3s, some of them into the 4s. Excuse me. And then when you take a look at the average ownership of a home is 13.2 years. Well, those homeowners that came in within the last 3 to 4 years, well, you got about 9 or 10 more years to go before we even see them enter back into the market on average. But let's take a look at our empty nesters. Empty nesters are saying, hey, listen, why should I trade my 3%, and most of them that I've been talking to, they brag about their 2.8, 2.6% mortgage. Why would they trade that for 7%? Well, now they are equity heavy. So what they're doing is renting out their property. They're buying their next, their downsized home, and they'll just wait it out because they know that the market is still doing well, and because that makes a fabulous investment for their portfolio. It's a no-brainer. Okay, so why are we not seeing that? Because sellers are on strike. They don't want to go to the 7%. They got great rates. Why would they do that? Well, there are some that naturally are. But again, it is super low inventory. So it's not going to happen in the volumes that people want. So are we going to see a real estate crash? No, because you need inventory that we don't have. All right, let's move on. Let's talk about the new construction, because new construction is killing it. Why? Because they know resales are not going to step up to the plate. And so they have been adding more and more inventory. Yeah, they add some pretty good incentives to help people offset the getting into the home, right? We've tied up a couple of properties recently, and we negotiated some pretty good terms. And the benefit to the buyers is it is less cost up front. And it allows them that ability to get in and either buy a rate down or to get incentives for upgrades, so that when they go to do that refinance, they're going to be in an even better position. Why? Because it just makes utter sense. When you are able to have a more focused and a better home situation, and again, where you're not having to travel miles and miles and miles, that made utter sense to these folks. And I 100% agree with that. Now, when we take a look at it, you can see that the pending sales are up, and we will surpass what we did last year. Yes, even with 7% mortgage rates, we are going to surpass what we did last year. That's my prediction. However, Q4, I am expecting rates to start rolling back. I think the Feds will do one more bump in rate, which is on the commercial lending side. Remember, commercial lending and residential lending are not even tied together. They're different, okay? I can't even tell you. They're like different states. Remember, commercial lending is controlled by the Fed rate. Residential lending is a stock market, mortgage-backed securities. Watch your 10-year treasuries, watch your bonds. Those residential rates are based on the market, not the Feds. People say, George, why do they keep talking about a real estate crash? Well, on the commercial side, if you've got $1 trillion of inventory that is now coming up for a refinance, because they don't do 30-year mortgages. They do 5, they'll do a 7, they'll do a 10, and the more goes up, the higher the rate. But they have had the benefit of super low rates, and they were making things work. But now with the COVID issues that happen and everything else, where now we have a lot of commercial vacancies because people are working at home, they then do have vacant spaces. So then that means people are using less office space, which then they cannot meet the demand. And then when we double interest rates on them, the commercial lending side of things is going to take, on the retail space, is going to take a little bit of a beating, hands down. Okay. In fact, in New York City, there was a prime piece of property that they returned back to the lender. Okay. Why? Because there's no way they're going to make it work. Not based on rates today and the vacancies. That's on the commercial side. Is it going to be systemic? It's going to have an impact. How much of an impact on residential lending? Very little. Why? 2 different games altogether. All right. That's my humble opinion. I'm sticking with it. All right. Bank owned. Look at this. They've been talking about shadow inventory. They've been talking about all kinds of issues with, foreclosures, and it's going to be mayhem, and it's going to swamp our inventory levels, and it's going to be crazy. It's going to be worse than 2008. No, it's not. We track this. I have tracked this for so many years with the different lenders that we work with. That's a bunch of hooey. Because here's the thing. Even in the last 3 years where we saw a 33% increase in home values, anybody that gets foreclosed today, it's because of something that happened before, and there's bigger issues because people are able to sell their home and still walk away with a few dollars. There is zero reason why I see anybody out there that should be able to or shouldn't be able to get their home sold and at least either break even or come forward, with a few dollars, even if, you were well back in the forbearance program and didn't make any payments. If you have any questions, reach out. We'll get you to some, in Washington State only, we'll get you to some folks that can really help you out, give you the best legal advice, because there's a lot of alternatives for you, including 40-year mortgages at revised rates to help you stay in your home. That is their goal. Anyway, when we take this and we move on to our next slide, we're down a little bit. Rates had been going up, and now they're starting to fall back off. We got some really good earnings numbers. Look, it's still crazy. Even the European market, was adding a lot of volatility to it, but rates did come down. We are starting to look at a pretty good rate value right now, concerning the last 5 months. And then when we talk about this is a massive issue. Look at this report. You can clearly see that even on a nationwide, because it tells you it was a nationwide stat, on a nationwide level, we have not enough homes. And it's the same thing on a local level. We're at least 1 million homes off from being able to have everybody as a homeowner. And when you take a look at that, that's why you're seeing a lot of these municipalities in Washington State pulling another, micromanaging, in my opinion, some statute to allow, higher densities, which to a degree is good. On the other side, it's, the municipalities have been doing pretty good working with the Growth Management Act or the GMA. Nonetheless, they're going to increase even higher densities. And yes, we will be able to achieve, getting closer to having enough housing for everybody. Okay. Yes, there will always be multi-generational housing. Yes, we will always have rental properties. Yes, we're always going to have transitory type of population. But all things considered, at the end of the day, how is our market doing? It is doing very well. Okay. We are still seeing multiple offers on well-priced homes. It's a given. Look at your new construction stats. Now, if you have any questions, make sure that you ask, because we really, really love questions. And remember, smash that subscribe button. Let us know what you think. Keep asking questions. There's no cost. There's no obligation. And if need be, I'll shoot you off a personal video and just let you know to better help answer your question. So in the meantime, you guys have an absolutely beautiful day. See you outside, and I will see you on the next video. Take care.